Welcome to Market Matters. I'm Khoo, Chong, and I'm joined by Charlotte, Chong. And the market today saw a bout of profit-taking. Charlotte down 13 and a bit points to 1705. Total volume 2.1 billion shares, worth about 1.85 billion ringgit. Decliners like CIMB, AmBank, and Nestle. Top gainers were Top Glove, SCM Engineering, and Hartalega.
Well, basically the whole region, we saw a sea of red. Basically, what happened was China, they announced some data on Monday, and it wasn't too pleasant. And that's why it actually resulted the entire region to go down today.
Well, not just any data, but Q3 GDP data. So the headline number at 6.9% year on year was actually 1.1% better than expectations. But at the key industrial production level and key economic activity level, they were weaker than expected, and that basically sends global markets into a bit of a tizzy, because a lot of markets around the world, like Brazil, like Australia, like even us in Malaysia, we do a lot of business with China.
Also
so when
in
they
China,
sneeze, we catch a cold.
Also in China, we saw factories have seen 43 consecutive months
That's right.
of falling prices, and despite flood of government infra spending, fixed asset investment decelerated in September this year. China trade-dependent nations like what you say, Brazil, Australia, Malaysia, we will see a hit from the slow growth from China.
Indeed, but the thing is, October, although it's traditionally and historically a pretty poor month in terms of global stock market crashes, Malaysia's got a couple of things to look out for, right? So we've got Budget 2016 coming up this Friday, where I'm waiting with bated breath.
What do you expect from that?
I'm expecting a lot of sugar from the government.
So I guess the government would probably actually narrow down the budget deficit, giving more freebies to the citizens. They'll try
and address the deficit, the budget deficit by basically narrowing subsidies. They'll do stuff for the bottom 40 income households. They'll do all kinds of stuff, right? But the bigger macro issues for where foreign investors are concerned is basically the political concerns. And CIMB went to Japan. They met 17 investors from 10 firms. They were all underweight Malaysia bar one. They all cited political concerns as their main concern, but they're all waiting to buy Malaysia. So if we can sort that out, we could be in for something interesting.
Coming back from Japan to Malaysia, ringgit has weakened to 4.28 against the US dollar today as a slowing Chinese economy lowered the commodity prices. And ringgit also dropped to its 2-week low on the concern that falling raw material prices will bring down the government income and widen the budget deficit.
Indeed, but just to wrap up the regional markets, there was a bit of a mixed bag actually, Charlotte. In terms of uppers, the Shanghai Composite was up by 1.1% to 3,425 points. The Nikkei in Japan was up by 0.4% to 18,207 points. But on the downside, Hong Kong's Hang Seng dropped by 0.4% to 22,989 points, while Australia's ASX 200 dropped by 0.7% to 5,236 points. So that's a wrap for the regional markets. Let's move along to a hot stock of the day, and it's actually NCB Holdings Bhd. That's NCB, Northport Corporation Bhd.
Correct.
That's right.
It owns NCB in Klang, and it closed 1.4% down at 4.35. But I understand that the story is not NCB, it's actually looking at MMC as a whole. MMC closed 1.3% down at 2.27 today. And what happened yesterday was MMC actually offered to take NCB private with 4.4 ringgit per share. And MIDF actually came out with a report saying that the offer price is fair. Although, despite that, we still saw a dip in the share price today.
Well, yeah, I mean, MMC is not normally your most liquid stock, but as you say, Charlotte, quite rightly, this is an MMC story. And what this means, because MMC already own 30.1% of NCB, they'll take this up to 84% on this current transaction, and then they'll make a mandatory general offer for the rest of NCB doesn't hold. After which, and this is at some point in the future, MMC will own Port of Tanjung Pelepas in Johor, they'll own Johor Port in Johor, they'll own Northports in Klang on the western seaboard, and they also own Penang Ports in Penang. So that means they'll own all 4 ports and all the main trading entreports on the peninsula of Malaysia.
Basically, what you're trying to say is they will
to IPO the port assets.
Basically, it will actually monopolize the entire port operator market in Malaysia.
Monopolize is a very strong word, but I wouldn't. it's an apt description.
So what happened in May this year? It's during an EGM. MMC Group Dato Sri Sheikh Khalid actually said that a port listing is actually a possibility. So with these actually coming into on their plate, I guess they will actually list all these operators, list all these ports under a company and pay out their borrowings.
Well,
probably.
They would do that, but of course, in the short term, and analysts being analysts, I'm going to cite Afin Huang. They reckon, and these guys are bean counters. They count beans all the time for a living. They quite rightly point out that the additional financing cost for MMC will come to around about 54 million ringgit a year,
Correct.
compared to and quite a lot more than annual NCB earnings
37
of
million
37 million ringgit. So they're
ringgit.
actually spending more in terms of, well, paying interest loans than the 100% of income from NCB. But as you quite rightly point out, Charlotte, if they actually spin it out in the future and get a windfall, then this kind of makes sense for MMC.
I was actually looking at the same report as well by Affin Huang analyst Lim T Yang. He says that MMC estimated earnings in 2016 may erode 6.5% as higher finance costs worth 1.44 billion ringgit to privatize NCB will outweigh the consolidation of NCB's earning. Basically, what they are trying to say is from this acquisition, MMC will actually see a dent in their 2016 earnings.
Of course, but you got to look long term, right? Long term. So to wrap up, for this particular deal, MMC is buying the rest of NCB it does not already own. This buyout will give it control of all 4 ports spanning the key entreports on the peninsula and will set up MMC for a port IPO, something which the Group Managing Director, Dr. Sri Khalid, actually mentioned and acknowledged in May this year. Okay, let's move on to some stocks with momentum. We've got 2 stocks on the horizon this morning, in fact this afternoon, in fact this evening.
This afternoon at 1 p.m. today.
Exactly.
Basically, start of the day flagged with positive momentum is Sarawak Cable Bhd. What they do is they manufacture and trading of power cables and wire, including supply, installation and commissioning services. This company, they're actually looking to sell more product. Actually, it's 132 kilowatt underground power cables to actually, they want to sell this product to get higher profit margin compared with other cables like 11 kilowatt cables and 33 kilowatt medium voltage power cables.
Correct. So this company, which already owns 8 manufacturing plants in Penang, Johor, Negeri Sembilan, Selangor, Sarawak, they already, their share price actually rose by 1.4% to 148. So it does show that this algorithm actually works sometimes, right? They want to increase power cable exports to 30 to 40% from the current 20% of total production now. And get this, they already bought Leader Cable last year. So Leader Cable plus Sarawak Cable, they already do a combined 800 million ringgit in revenue, okay? Already. They're aiming for 1 billion ringgit this year. So that's 20% more, in fact 25% more. So that's not too far if you count their higher profit margin items as well as their new export markets of Australia and Singapore.
So what happened last year in last December was it actually acquired 2 companies, Leader Cable Industry Bhd and Universal Cable for about 210 million ringgit. Now this is a wiser buy compared with what happened with MMC Bhd and MMC Corp and
From
NCB.
an earnings perspective, right?
Correct. So because these 2 companies, they actually register combined sales of 800 million ringgit every year. And back at home, Sarawak Cable actually, they say they are in advanced talks with Petronas Pengerang Integrated Petroleum Complex project in Johor. And this project would actually enable them to sell more power cables, 275 kilowatt cables that covers about 8,100 hectares.
Exactly. So that's something to watch out for. Let's move on to another company. It's called Reach Energy. It was the last of the 4 oil and gas SPACs that was listed on Bursa Malaysia. And it's also a positive momentum stock. And of course, Reach actually closed up 2% to 62.5 cents this evening. Well, the thing is, now they've got about another 2 odd years to reach, to get the qualifying asset under their pockets, right?
Yeah, recall that Reach Energy was actually listed on Bursa Malaysia in 2014.
That's
so
right.
they
So
have
they've got
about
a 3-year horizon.
2017.
That's right. So they got about, I think, something like 750 million ringgit from the IPO, which they raised to buy a qualifying asset. The trouble is, with the ringgit dropping by 25% in the last 1 year, their ammunition has been diminished somewhat.
Actually, what happens was they actually have seen their proceeds shrunk by 24% to about 182 million US dollars. But Reach Energy say that they have shortlisted 4 candidates in Asia Pacific, and they say they are confident to secure a QA within the next 6 months.
The best thing about the oil and gas market being where it is, because everything's so depressed, right? So assets have become distressed, and we've seen Sona Petroleum say the same thing via Dr. Sri Hadian, right? So basically, this is a good time to buy. It's a buyer's market. So basically, that's all we've got to watch out for. I think one more point to point out, and this is the CEO of Reach Energy, Shahul Hamid, right? He said that as long as the ringgit does not go lower than 5 to the US dollar, they're still in with a shouting chance.
So I spoke to one of my colleagues from the corporate desk, and he told me that he actually wrote a story on the SPAC sector last week, and he said that all these SPAC companies, the purchasing power actually shrunk by about 20% because of the depreciating of ringgit, like what you say just now. And Shahul, from that article, Shahul actually say that we want to get it right and we want to get the best deal of the best value.
Absolutely. So in terms of wrapping up, both companies, Sarawak Cable, 3 reasons why it matters. As of July this year, they have a tender book of about 1 billion ringgit. They're targeting to secure 300 million ringgit of that. They want to increase their power cable exports to 30 to 40% from the current 20%. And of course, the group managing director, Toh Chi Ching, he said that Australia and Singapore are key export markets for their higher margin underground cables. For Reach Energy, the 3 points why it matters, they've shortlisted 4 candidates in Asia Pacific. They're confident of securing a qualifying asset in the next 6 months, deadline 2017, and their cash pile has shrunk 24% to 182 million ringgit due to the ringgit swoon.